Imagine two giants holding up the world, the United States and China. These two nations, separated by an ocean but bound by commerce, have become the pillars of the modern global economy. Their influence stretches far beyond their borders, shaping the lives of billions. For decades, their economic partnership has powered global growth, connecting a farmer in Iowa to a factory worker in Shenzhen. Every day, goods, ideas, and investments flow between these countries, creating opportunities and challenges on both sides of the Pacific. This isn't just about buying and selling, it's a vast, intricate web supporting millions of jobs, keeping prices low and fueling innovation. From the food on your table to the phone in your pocket, the US-China relationship touches nearly every aspect of daily life. Today, in late 2025, a fragile truce has paused a trade war that threatened to unravel this system. The world watched as tariffs rose and negotiations stalled, fearing the consequences of a prolonged conflict. For Americans, this relationship means affordable goods, low inflation, and access to a vast array of products. The shelves of stores across the country are stocked with items made possible by this global partnership. For China, it's been the engine lifting hundreds of millions out of poverty and building a new middle class. Cities have transformed and opportunities have multiplied, thanks in large part to trade with the US. The two economies are deeply intertwined, like climbers roped together on a mountain, each relying on the other for balance and support. Their fortunes rise and fall together, making cooperation essential. Their trade links ripple out, shaping global supply chains from Vietnam to Brazil, influencing industries and livelihoods in nearly every corner of the world. The effects of their partnership are truly global. A breakdown wouldn't just hurt Washington and Beijing, it would send shockwaves worldwide, disrupting markets, jobs, and the stability of the global economy. The recent truce is a reminder. Both sides know a complete split would be catastrophic, not just for themselves, but for the entire world. But the peace is fragile, and the world is watching what happens next, hoping that cooperation will prevail over conflict in this delicate balance of power. The US-China trade relationship is a two-way superhighway. America exports soybeans, corn, and high-tech goods, machinery, medical devices, and aircraft to China. In return, a river of Chinese goods fills American stores: electronics, clothes, shoes, toys, and furniture. This flow keeps prices low and shelves stocked, shaping the American lifestyle. It's not just finished products. American factories rely on Chinese parts for cars and electronics. This global supply chain supports millions of jobs on both sides of the Pacific. Dock workers, truck drivers, and retail employees in the US all depend on it. In China, entire cities thrive on manufacturing for the American market. The economic bond is deep, making a sudden stop in trade a terrifying prospect. The stakes are high for workers and consumers in both nations. Imagine if, overnight, China suddenly halted all trade with the US, a scenario that would send shockwaves through every corner of American life. The first signs would appear at your local store. Americans would walk into supermarkets and big-box retailers, only to find empty shelves where everyday products once sat. Within weeks, shelves at Walmart and Target would be stripped bare. Electronics, clothing, and home goods would disappear, leaving shoppers scrambling for dwindling supplies. Scarcity would send prices soaring. A $500 laptop could suddenly cost $1,500, and sneakers might triple in price. Everyday items would become unaffordable for many. For families, even basic necessities would become luxuries. Low and middle-income households would be forced to make tough choices, cutting back on essentials just to get by. American factories, heavily reliant on Chinese parts and materials, would grind to a halt. Production lines would stop, and the ripple effects would be immediate. Layoffs would sweep through manufacturing, trucking, warehousing, and retail. Millions of jobs could be at risk as businesses struggle to adapt. Farmers would lose their biggest customer overnight. Crop prices would collapse, unsold harvests would pile up, and rural communities would face economic devastation. High-tech exporters would lose billions in sales, slashing jobs and stalling innovation. The tech sector, a major driver of the US economy, would be hit especially hard. The economic shock would ripple across the nation, from the fields of the Midwest to the labs of Silicon Valley, touching every region and industry. The pain would be sudden, severe, and widespread. Families, workers, and business owners would all feel the impact. No sector would be spared. Education, healthcare, and manufacturing would all face unprecedented challenges. The US economy would be thrown into turmoil, with uncertainty and hardship touching every American life. For China, Losing the US market would be a national crisis. Factories in Shenzhen and Suzhou would fall silent, orders canceled, and warehouses overflowing with unsold goods. Millions of migrant workers would lose their jobs overnight, triggering a mass exodus from cities and plunging families back into poverty. The financial system would be rocked by bankruptcies and bad debt as factories default on loans. Shipping and logistics would collapse, and real estate in industrial cities would crash. China would lose access to vital US imports, soybeans, food, and especially advanced technology. Tech giants like Huawei would be crippled, stalling progress in AI and 5G. The crisis would threaten China's long-term ambitions and economic stability. The shock would ripple through every layer of society. The world's factory would grind to a halt. A US-China trade collapse would send shockwaves across the globe. The world's busiest shipping routes would freeze, ports would empty, and global logistics would seize up. Resource exporters like Australia and Brazil would lose their biggest markets, plunging into recession. Oil prices would crash as China's factories go dark, destabilizing the Middle East. Southeast Asian economies, built on supplying parts to China, would face mass layoffs and factory closures. The intricate web of global manufacturing would unravel, leaving economic destruction in its wake. Political instability would rise as economies falter and unemployment soars. Globalization would fracture, replaced by rival economic blocs and rising nationalism. The dream of a connected world would be shattered. The global supply chain is a complex puzzle, with pieces scattered worldwide. A smartphone's journey starts with minerals from China, metals from Africa, and chips from South Korea. All these parts converge in Chinese factories for final assembly. If US-China trade stops, this entire system collapses. Factories in Korea and Taiwan lose buyers, mines in Australia and Brazil lose orders, and every link in the chain breaks. Rebuilding supply chains elsewhere would take years and cost billions. No country can replace China's scale and skilled workforce overnight. The world would face chronic shortages and wild price swings. Businesses couldn't plan, investment would dry up, and growth would stall. Consumers would face scarcity and sticker shock. The era of predictable, affordable goods would end. Not everyone would lose equally in a US-China trade collapse. The impact would ripple across the globe, but some countries and industries would be hit much harder than others, while a few might even find new opportunities amid the chaos. Countries like Mexico, Vietnam, and India might attract new factories as companies seek alternatives to China. These nations could see a surge in foreign investment, new jobs, and a chance to boost their economies as global supply chains are reconfigured. This friend-shoring could bring jobs and investment, but none can match China's scale or efficiency. Even with new factories, these countries would struggle to replicate the vast infrastructure, skilled workforce, and logistics networks that China has built over decades. Transitioning supply chains would be slow, costly, and prices would stay high. Consumers everywhere would feel the pinch, facing shortages and inflation as companies adapt to the new reality. The biggest losers, besides the US and China, would be industrial giants like Germany, Japan, and South Korea. Their advanced manufacturing sectors are deeply intertwined with China's economy, relying on both Chinese demand and Chinese-made components. Their economies depend on exporting to China or supplying its factories. A sudden break would disrupt their industries, leading to layoffs, factory closures, and shrinking exports. A halt in Chinese production would trigger deep recessions in these countries. The shockwaves would be felt in everything from car manufacturing to electronics, threatening millions of jobs and entire communities. The world would fracture into rival economic blocs, one led by the US, another by China. Countries would be forced to choose sides, reshaping alliances and trade routes in ways not seen for generations. Trade would become more expensive and limited. Barriers would rise, slowing the flow of goods and making it harder for businesses to operate across borders. Global tensions would rise, making cooperation on big challenges even harder. Issues like climate change, pandemics, and security would become even more difficult to solve in a divided world. Economic fragmentation would define the new world order, leaving nations and people to navigate an uncertain and more divided future. The scenario of a total US-China trade halt is a warning. It shows how deeply our prosperity depends on global cooperation. The system we rely on was built over decades. Tearing it down would be a historic mistake. Competition between great powers is natural, but it must be managed responsibly. The recent trade truce proves dialogue is possible, even amid deep disagreements. Global challenges, climate change, pandemics, economic opportunity, require cooperation, not division. Building bridges, not walls, is the only way forward. Trade isn't just about goods, it's about relationships and shared interests. The path of cooperation, though difficult, is far better than the alternative. A connected world is safer, richer, and full of opportunity. A future worth working for.